So what I'm going to do is today I'm going to talk about different products what we have and which are the ones which are
Guru,
important for every one of us to know and learn from today. Go ahead, Sri.
Guru, sorry to interrupt. Can we record this so that we can give it to other partners as well?
I don't think we have a recording yet.
Okay.
Let's start. I don't think we are recording this, but we'll figure it out. So you can see my screen now. How many of you have a chance to see the screen?
I can see
I
it,
can
but
see.
might be a
Okay,
better if you can zoom in a little bit.
a little bit more. Let me try to increase a bit, 125. If I do more, then the whole thing is not visible. That's the only catch. Okay, now it's better, I guess. So you can see here in our portfolio, we have many companies. What I'm going to do today is I'll go through each one of them in a high level. Then in the end, I will ask questions or you can ask any questions. That time we will answer them. So if you see here, first is the term, then we have the IUL. So we'll go through the term alone. We have multiple providers in our portfolio, but I have put here the key ones which we will encounter, use on a frequent basis. Some of them we are not using, but it is there in the portfolio. There is specific scenarios where it can be useful. Okay. Now, if you look at the term, I have categorized it based on the benefits. At the same time, key areas where we can offer it, what kind of client we need to offer it. So you will have more clarity. Many times when we join a business of this nature, we don't know what products are there, which one is important, how do we offer them, all that. Okay. So if you see here, Symmetra is a company which is cheap, which has all the term policies have terminal illness, living benefit rider. Chronic and critical are not there with everyone. Okay. So when do we use any policy that is cheap and doesn't have all the living benefits? Mainly if someone says, I want a cheap coverage, I'm not looking for benefits. I have a mortgage. I need to protect the mortgage if something happened to me, if I'm not there. So it's paid out and the mortgage is taken care. That's a very good way to use it. Transamerica's Super Trendsetter, we call it Transamerica Super. Trendsetter is a series of products. So there again, it is cheap. It can be used specifically when they are using it for, covering the mortgage or whatever, or they are looking for the cheapest policy. Okay. Corebridge is the next one. Earlier it is called AIG. It's renamed, rebranded in the name of Corebridge. They have what is called QOL. It is called quality of life. It's a flexible, they call it QOL flex term. Maximum coverage, they give up to 35 years. That's the highest living benefit term in terms of duration they offer. And it has all the three living benefits. It's one of the cheapest living benefit product. The processing is very slow. Keep in mind, when you offer this to the client, tell the client it's a cheap company in terms of price. They have good living benefits. It will take you 2 months to get approved many times. If it is good, if they're a citizen, if they have all the records done in the last 6 months, it could get approved faster. So just tell them that it's important to know, because when it gets delayed, people get jittery or they are thinking which one I should do, what I should do and all that. Next one is North American. One of the key things is it has all the living benefits. It is anywhere from 5 to 8% more expensive than Corebridge. Processing is very good, fast. They can get the policies done quicker. So if people don't like to wait, call and follow up, I will say make North American as one of the key products you're offering. Then the next one is National Life Group. They also call it LSW. So this is used to be two different companies, LSW and National Life, but is now merged into one. It's called National Life Group. Now they have all the living benefits. The beauty is that it has got 5 living benefits, one of the best in the market, and it has got critical injury and Alzheimer's additionally, apart from the critical, chronic and terminal illness. So this is the standard 3. They have additionally critical injury and Alzheimer's also included. It's the same even in the permanent platform in the IUL. Kindly mute yourself if you're not talking. Then we also have protective. The beauty with the protective is that they give you a 40-year term. There are some people who have a mortgage for 30 years, but they like to have a longer duration of coverage. You can offer the protective one. I see many people are doing protective also. They don't have critical and chronic illness, but it's again cheap. It will be in the top 3 or 4 when you look at the pricing, and then you will be able to do that. Now here, when it comes to protective, if you see Costco, they also offer the protective policy. They have a little bit edge with us when it comes to the policy. They will be about 3 to 5% lower than our quote. But what happens in the Costco protective offering is that after 3 or 5 years, the premium goes higher. It is not a level premium. They raise the premium after 3 to 5 years. Many people don't know this. They just look at the price. So if you have any such situation, talk to your EDs, talk to the person who is supporting you, understand it properly so you'll be able to tell the client, hey, your premiums will go up for the next 15 years after 5 years. So you'll end up paying more, but they don't know that. So if you see that scenario, just be aware. Transamerica Living Benefits, we call it Transamerica LB Trendsetter. They have all 3 living benefits. They are a little bit expensive. They are close to the price of National Life Group. If someone has got that, we can easily say, go with National Life Group, which has more living benefits. And when you do the conversion, you will have all of them automatically. And one interesting thing with National Life Group is that when they added this Alzheimer's and critical injury, they added it to the old policies. So that's a good company. When they're offering something new, they're adding it to the old policies too. So you can tell them, hey, you go with such a company, you will get this benefit. Okay. GTL and Mutual of Omaha, I have not done a lot. I can say it is there in our portfolio. Foresters, when people have diabetes and different scenario, it is very good. When no company is offering coverage, try with them. You could get a coverage, especially when people have high levels of diabetes. It's good. You need patience when you deal with foresters because they do not get the medical records from the doctor. You have to intervene. You have to collect the records from the client and send it to them. So it might take extra effort when you work with them. So you have to be conscious and aware, have the patience to deal with that. Emeritus is added to our portfolio recently. They have some interesting features. They have an instant term option. Pricing is a different factor. That means if someone says, I want coverage tomorrow, or let's say within 24 hours, that's a good option. You can go with the instant term. It's just being rolled out. We just started getting the contracting with them. So just be aware that that's a good option to have it. The living benefits rider works very differently there. So learn that if there's a particular market segment, you can go with that. Lafayette is the last one. It's a whole life company. It's a mutual company. Very solid, very good. The beauty with that is that they have all 3 living benefits. At the same time, conversion is for the full period. Now, this is the first time I'm talking about conversion out of all these. All the above products, you will see that if it's a 10-year term, the conversion is only for 5 years. Makes sense? It's not all the round period for 10 years. So if you have a 20-year term, they will do the conversion or allow the conversion only for 10 to 12 years. If it's a 30-year term, they will allow conversion only for 20 years. Keep that in mind. It's not that can be converted for life. It's very important for you to understand that how conversion works, because every client, they need to know this. If they are in bad health or whatever health, they are not going to buy the permanent term in the next 10, 15, 20 years. They want to live it that way. Sometimes it is better to go with Lafayette because when they are old, they are not insurable, they have health issues. This conversion comes in handy. What is conversion? When you have a term policy, you can convert it to what? A permanent policy. Which permanent policy will they allow? How they will work? So let us say you have a Corebridge or North American or whatever. When we are talking about a 10-year term, they'll allow conversion for 5 years. They will say all the list of products we have, we will allow convertibility. After the 5 years is over, they may allow conversion, but they will restrict, saying you can only convert it to product 1 or 2 in the whole portfolio, not to every product. Now, what does it mean? That product, you will eventually figure that it's one of the most expensive product they're offering in their portfolio. There is no choice. If you need conversion because the health of the client is bad, they can only convert it to that product. Make sense? So convertibility is important. Understanding how conversion works is also important. So you have to figure the client, understand them, and then go from there. So many times people ask me, which is the best one? Can you tell me which is the best one, right? National Life Group has the best living benefit features. When should I offer this to a client? Let's say someone says when they're talking with them casually, before even talking about insurance, business, anything, talk to them and figure out how are they doing, what is their health, what is the family, how much is the income, how are the kids, what is the school, everything. And then say, how are your parents, where do they live? Oh, it's good that they are healthy, everything good in back home or here. Then you will know whether the family members have any health issues. Some of them may be not able to take care of themselves properly. That means you can offer them saying, hey, you have a family history. I would recommend this if you're okay with the premiums. It's about 10 to 15% more, but instead of going with any of this, go with this one, you'll do that. Or you tell them they're going for a 1 million term or 2 million term, you take 1 million here and take another 1 million here. That is structuring the product now. Why we should give 2 term policies to someone instead of 1? They can take living benefit from 1 policy instead of disturbing the whole 2 million. Multiple policy also helps. So just see the client scenario and then go from there and figure out that and then do it. Be cautious. Some people will take 1 policy and then they say, I don't want the next one. Be aware of that. It can happen. You're talking to a client for 2 million coverage. He will say, okay, let's do 1 with this. He did that. Then the second one, they may not even move forward. So you have to figure out that, understand the client's psychology, and then go from there. Make sense? Now, you got the conversion. The last point in the Lafayette is that conversion is for 20. If you have a 20-year term, conversion is for the whole 20-year period. If it's 30-year, you get conversion for whole 30-year period. So it is very important to understand this. Even New York Life, they have the same thing. But New York Life, normally you'll see agents will offer only 20-year term or a 10-year term for the parent, and they'll do a whole life for the kid. Don't ask me why. That's the psychology. That's how they do. They know that long-term basis, they will get the business because they will be forced to convert. They will get it done. So this is their sales technique. They will say the premium is cheap for the kid. Just go ahead, $100 per month for the kid, whole life. Put some money there for the college. And then for the parent, they will give a term. And they know that they will go and convert it later to a permanent. And they will say, hey, nothing to worry. You can just convert it. So understanding competition, understanding markets situation is also very, very helpful. Okay. Now we have completed the term part. Almost all of them we have gone through. The IUL also, when it comes to living benefits, it is same, more or less all the same features are there, but there are some additions. Okay. So when it comes to North American National Life Group, same living benefits, same features are there. North American, the approval is speedy. They have a high participation rate. Generally, I have seen any IUL policy, if you overfund it, it will work very well. If you're doing target premium, it is okay, but always overfund at least 20%, 25% of the premiums. So the policy will not lapse. And if you do a target premium, at least do it for 20-year payment. Anand and me always propose to the client to do overfunding. Split the requirement of coverage into two pieces. One is the term component, another is the IUL component. So when you split the coverage, ensure that they do the application for both, preferably simultaneously. If they're not doing, 99% they will take the term, they may not do the IUL immediately. So if they have money, if they are comfortable, do both together so they are covered properly for the short term and the long term. Make sense? Now, FNG, the illustration runs very well. They have a solid fixed interest, what they give. All other companies, you will see that the fixed interest is about 2.5%, 3%, 2.2%, whereas FNG's fixed interest rate is itself 4%. Very good. So many people like it. So that is a good part. Now, looking, all these I have been talking about is from client perspective. Okay, illustration figures runs very well. It is good. When it comes to IUL, we'll do a separate session for all the licensed people later, how to structure the IUL, okay? Not immediately, but sometime later. It is important to understand how to structure IUL, how to overfund, how to take leverage of the IUL as well. That time we'll go to specific product and then do that. Nationwide New Heights. Nationwide has got New Heights product. Nationwide has also got what is called the accumulator product. They also have what is called a protector product. Now, those three products, you have some special benefits. I will cover a little bit later. The good thing with Nationwide is that they also have long-term care, which is an optional rider. You can add that. Then you have also the long-term care included in the policy. The decision you have to make when you sit and talk with the client, whether the long-term care is required, is it mandatory, depends on the age. For a young person who is like 25, 30, you don't have to add the long-term care, but it's an option because at a low rate, they're getting it. And if you look at how the Nationwide works, internal cost is supposed to be less. They call it one of the cheapest policies in the market. Now, is it true? Yes or no? You do your own due diligence because everyone's analysis criteria is different. So it's supposed to be cheap. Okay. You will have a separate Nationwide IUL training in the next couple of weeks. We are trying to organize that from Nationwide directly. So the NXS team is going to come and do that. I spoke to them today. They will arrange one for our team. So we'll have that separately later. Allianz IUL is one of the best products if the client is overfunding only. If they're doing target premium, don't even offer Allianz. They have a very good index locking feature. That means most of the IULs, they look at if you take the way the crediting is done, they look at the beginning index value, they look at the ending index value. Whatever is the delta, that gives you how much credit you'll get. Whereas with Allianz, if in between the index value is high, you can choose to lock it. Say, for example, the cap is 15% in some company, right? And when the index is closing in that particular period, you got only 8. So you get only 8. In between, it went to 15, but when it closed, it was 8. So you get only 8% credit, nothing more. Whereas here, you can decide to lock it. It's your choice. It doesn't happen automatically, but you have to lock it. You can say that if it goes to 15 or 16 or 20%, you lock it. So you'll get it locked. And they have uncapped strategies also. That is a good thing. When it comes to premium financing, we use Allianz and also National Life Group through Kaizen. That's a separate offering. We have Kaizen for premium financing. These two companies they use because it's highly leveraged. They got some excellent features. Most optimized solution for premium financing they have. Okay. Now CoreBridge has got the protector and the accumulator. Accumulator they use for mainly for overfunding, building cash. Protector is for having a protection. You can add a guarantee to it. So you can say, I want to guarantee till age 90 or 95. So the policy will live till 90 or 95 guaranteed. And non-guaranteed is still there. It can go to 125. So you have a way to offer protection for the client with some guarantee. And many people like it, especially people who are aged, people who don't want more cash value buildup. They want guarantee. You can add also what is called an additional chronic rider, 2%, 3%, 4% you can add. It is similar to LTC, but it's not LTC. It's called chronic illness rider. It's a paid rider. So you can guarantee the 2%, which is there. Okay, it's a paid rider. That is the added advantage. This chronic illness rider, you can add it in the protector and the accumulator as well. Now, there is also protective. They also have the paid chronic illness rider. Just for your information, you can add the 2%. They don't have critical illness, but they have chronic illness. That is optional. It is working like LTC, but not LTC. The IRS codes are different. LTC uses 7702, whereas chronic illness paid rider is 101G. So you need to know that if someone asks. That's why I'm saying that, but it's important to know and understand how the industry works. But understanding that is important. Transamerica has got two IUL products. One is the FFIUL and the other is FCIUL. FFIUL has got LTC. FCIUL doesn't have LTC. The main difference is that without LTC, you can build more cash into the product. That's why they have that special design. It is launched only in 2023. Before that is FFIUL only. Now, Columbus Life, underwriting is easy. It's a little bit expensive. When unknown people are there, internet marketing is there, many people offer Columbus Life because they just want to get the policies done. They want to get the premium. They want to get the maximum commissions. Okay. So it is very good for that, for making money. You will see people who are only selling over the internet, over the phone, marketing, internet marketing, they go with that. Mutual of Omaha, it's again a very solid company, very old company. They have LTC as an optional thing. The only difference is that it has to be a permanent disability kind of thing. Only then that works. Lafayette is good. They have infinite banking option. It is not IUL. It's a whole life. So just for your information, it is not IUL. It's whole life. That's a good product. All of them have to learn and understand this product. It's very unique. I can tell you that it helps to learn and understand it. There is a market segment for it. If someone is doing flipping of properties, they want to overfund, they want a solid guarantee, and they want to have ability to take out money, that's a good one. It's a good competition for New York Life, Northwestern Mutual, Mass Mutual, all that. Okay. We will soon be getting Mass Mutual. I don't know when exactly, but it's coming. Just for information, I'm just telling that. I think that's all we have on the whole list.
Hi, Puru. I have a question. So you mentioned for older clients, right? Or here for the for
Hmm?
which